this call. This is Roger Murphy. I'm the CEO of African Battery Metals, and I have with me Iain Macpherson, who is a non-executive director of ABM, but is also the founder of Medini, who are our technical advisors. And I maybe at the end of my remarks just hand over to Iain just to make a little bit about Medini and just to emphasize the important role I think that group who are contracted to us is providing in Congo. Just stepping back.
Good afternoon, gents.
There we are, Iain as well. Just step back a year or so. Medini took a 26% stake in what was then Sula late in 2016. I was nominated as CEO. Iain joined the board as COO. As a non-executive. And Nick Worrell, who was then the CEO, stepped down to COO. We focused for a year or so on Sierra Leone, raised quite a lot of money, all of which went into the ground. 9,000 meters of drilling, had some very good results. Some not so good results. That's the nature of exploration. We still have what we believe is a very good gold project. It needs quite a lot of exploration dollars to put together a large resource, but it is high grade, and we have signaled to the market we're looking for a joint venture or farmer. So back at the end of, and we already signaled in our press release that we have somebody in the data room having signed an NDA who approached us, and we're in touch with other parties. But late last year, we announced a change of strategy. We raised through SP Angel and Optiva £1.75 million, renamed the company African Battery Metals, and acquired two options on cobalt copper exploration projects in the DRC. We contracted Medini as our technical advisors. They've been very helpful. One of the partners of Medini, aside from Iain Macpherson, is a Congolese metallurgist with around 30 years experience of mining and building process plants, including in Congo. And he is now formally the head of our local ABM's local entity, through the structure through which we own our local licenses. We have announced in the last few days, the reason we're focusing on cobalt, I think it's fairly widely known. It's at the center of the electric vehicle revolution. Governments talking about 30 by 30, which is 30% electric vehicles by 2030. And, as a takeaway number is apparently a Tesla has 23 kilos of cobalt in it, as well as nickel and other metals. Roskill, who are the independent consultants, have forecast that by 2027, in other words, 10 years' time, the cobalt market will have trebled. There's a lot of attempts to find cobalt elsewhere in the world, but the DRC dominates and, in our view, will continue to dominate. It currently supplies 2/3 of the world's cobalt, and it has nice, simple metallurgy and near-surface mineralization, whereas a lot of what's been looked for elsewhere in the world contains significant quantities of arsenic and the tonnage is not there. So I think the market will still be dominated by Congo 10 years in the future, and we're intent on being part of that equation. We announced earlier this week our first exploration news. We started exploration in late January. We announced earlier this week that we've completed a satellite imagery report which has generated a number of targets on Kisinka, which is our main focus at this stage. And we've also been on the ground mapping, and there's some photos which will be coming out in due course which will show some of our activity. And we have identified from the ground mapping a number of other areas that look prospective. We've also, a very commonly used tool in the DRC is clearings in the savanna woodland, which are typically associated with high levels of mineralization. And the high levels of mineralization mean that only certain stunted plants can grow on them. And there's a whole science, by the way, behind this. But the short is that they provide targets for exploration. So we have those targets as well. And the initial follow-up will be an augering program, which the auger is on site and is due to start. I haven't heard, but it was either going to start today or sometime in the next day or so. The initial program is a few hundred meters. Augering is a very cheap way to get to the bottom of the soil profile. It'll do down to 20 or 30 meters, and we will, give us an idea. Instead of relying on soil geochemistry, we're getting down to the bottom of the soil profile, close to the bedrock, and that will give us a very effective and fast way of assessing what we have on the ground. And that initial program starts now, and based on the results of that, we will assess whether to expand that. We also signalled in our press release, aside from all the on-ground activity, two other things. Firstly, we highlighted that our second license, Sakania, with the option for which we've paid nothing so far, was due to elapse at the end of January. That has now been extended for no cost to the end of April. The reason we've done that is it's remote from it's 100 odd k's from Lubumbashi, and we need to get in there in the rainy season. We haven't been able to yet. We need to do due diligence on the license before assessing whether we exercise our option or not. Then we also indicated in the release that we are looking. We've been approached on two other licenses which may, I think, have more evidence of existing copper cobalt mineralization, and one of those two could provide an alternative to Sakania. So we're assessing. This is just test work at the moment. There's no cost to us of that, but we will make a decision in due course. And then finally, going back to Sierra Leone, we indicated, as I said at the beginning of this call, that we have somebody in the data room having signed an NDA, and we're in discussion with another group and are seeing interest elsewhere in doing a farm out where somebody would earn into the license by funding exploration, and we would negotiate some sort of free carry, possibly with an upfront fee, depending on. So there's a discussion ongoing there. I mentioned Medini. I think I'll just ask Iain quickly to introduce himself, and then I think there's more value for people to be able to ask us questions. So let me ask Iain to talk for a couple of minutes, and then we'll open the line, for questions now.
Thanks, Roger. Good afternoon, everybody. My name is Iain Macpherson. I'm founding partner of Medini Minerals. Medini was put together about 3.5-4 years ago by a group of similarly aged, experienced mining professionals, different disciplines within the mining sector. And the objective, using our own, we're the owners of the business, using our own money to identify and become involved in mining projects, and a specific target was distressed, near cash opportunities where we felt that our management and technical skills, corporate skills, coupled with some of our own capital and some third-party capital, could affect a turnaround, and we take equity stakes and manage operations back into success. Sula, as it was then, was one such target. A little bit earlier stage than most of the stuff we look at. Sula was brought to us by one of my backers who was interested in the company and couldn't quite understand why the company seemed to be stagnating. We took a large stake in Sula, refinanced the business, put Roger on the board, and moved it forward, developed the project further. And as the market evolved Sula into African Battery Metals and brought in some cobalt projects from our stable in the DRC. So Medini is a very hands-on group of mining professionals, different disciplines, 6 partners essentially. There's myself and Roger, who you've now heard about. Serge Ngandu is very important in the case of ABM. Serge is a Congolese educated and trained process engineer. Was headhunted by one of the big South African mining houses in the 90s, where I first came across him. I was working in South Africa at the time. Came to South Africa, where he ran one of the big gold plants for goldfields, and then went into the engineering business, and was most recently new business director for Worley Parsons Africa before he joined Medini. John Gould's another partner, a geologist, similar background, one of the big mining houses, basic operational training. John is anything but an exploration geologist. He's an operational production geologist, very corporately, commercially switched on. So really able to take the step from pure resource work to the commerciality of geological resources. Other partners include a chartered accountant and a corporate financier. So it's a very strong, very capable group and very hands-on control of operations. That's a brief summary about Medini.
Maybe before we hand over to exploration, I would like to say why we started with Kasinka. It's 30 kilometers east of Lubumbashi, the regional capital. There are 7 producing mines within 25 Ks. We understand anecdotally that more than 10% of the world's cobalt comes from within 25 kilometers of our license. We're looking to verify that so we could put that number out with some authority, but we can't do that at this stage. But the point is, we're right in the fairway. There is a lot of activity in the area, a lot of cobalt production. We're on the same rocks that are being mined elsewhere. We have indications of cobalt on the license, including from an independent consultant who identified up to 2.5% in a small artisanal pit, 2.5% cobalt, I should say, based on an XRF gun, and we are following up on that and other indications of mineralization on the license, and we will, I hope, have news in the near term. So I think I've covered most of what I wanted for an introduction. I'd like to leave enough time for everybody to ask any questions they may have. So Darren, I don't know if you want to unmute the line.
Yeah, people can unmute themselves. Actually, #1 is easier then. I'll get a lot of background noise.
Okay.
So they can do that. And in the meantime, I would like to ask a question, Roger, if that's okay?
Please do. I'd love questions. Yeah,
so on the current target, Kasinska, if you, obviously you're going to go into the auger drilling, if that's successful, what do you see the roadmap looking like for that project? Obviously, is it going to be further drilling? Will there be a PFS, BFS, JORC resource, sort of, those sort of milestones, or is there an option to sort of fast track any of that to get more near-term production?
Darren, I think we will assess it based on what we see, but one of the skill sets that we have, both between ABM and Medini, is the ability to mine quite quickly. If there's a sufficient amount of cobalt copper mineralization close enough to surface, we would start with the auger drilling and then maybe put some trenches and pits in there. And if it looks attractive, why not expand the size of the pit and start to kind of generate a bit of cash? There is a ready market being capitalized on by the artisanal. The 7 mines I talked about are major industrial scale, but there's a lot of artisanal miners, and that just doesn't mean a guy with a pick and a pickaxe. That means mechanized artisanals with a few trucks and a couple of bulldozers digging pits, generating a cobalt concentrate and selling that into the local markets, which is dominated, as people know, by the Chinese. So, I think if it's a large, high-quality resource, maybe we would like to take it through. If you're going to build a major mine, then you do need to go through those hurdles of resource definition and then some sort of feasibility study before spending big money to build a big mine. But if there's an opportunity in the short to middle term to generate a bit of cash flow by mining near surface, we would certainly have the skills in-house to do that.
Yeah.
Maybe Iain, as the mining engineer, has built a number of mines. Perhaps he could comment on that as well.
I think there's certainly an opportunity to do some smaller scale cash flow early stage work. We would be very cognizant, though, that you don't want to sterilize a very exciting resource by possibly high grading or inappropriately mining a small section of it up front. So it very much depends on the exploration program and what it determines and what it brings out. And it may well be that there's an opportunity to tackle a part of it or maybe a satellite section of it remotely to generate some cash flow. But obviously we're hoping that this is a significant resource. We targeted it very carefully on the basis that it has the potential to do exactly that. Then we certainly wouldn't want to destroy value by jumping in too early and in an uninformed manner.
Before we hand on, the one other point I'd make in that regard is, whilst it is our clear strategy to find and build a mine, you have to be aware that there's been a lot of consolidation in Congo and, significant mines which are quite, within 10 to 30 kilometers of us, like Kinsevere, Rwashi and Etoile. Kinsevere, along with Dikalushi, which is further away, were part of the Australian company called Anvil, which was bought out by the Chinese, and Rwashi and Etoile were part of Metarex, a South African group, which was bought out by another Chinese group. So, and those kind of M&A type acquisitions don't happen on small kind of artisanal scale cash generating. They happen on big kind of commercial industrial sized mines. So, we'll be cognizant and opportunistic, but that's an important point to bear in mind.
It might be worth mentioning that I'm very conscious of that route, having gone through it myself with a previous venture called Euromin, where we took a fairly advanced uranium project at the right time in the uranium cycle and developed a large value business, which we then sold on to a much larger producer. So it's about timing, it's about recognizing the opportunity and about developing the project properly. So we're very conscious of that. We'll assess that continually. But we do believe that Kasinga represents a really good opportunity for a scalable resource and a scalable operation in due course.
Iain, I didn't realize that you were involved in Euromin. Was that the uranium asset that was sold to the French?
Yeah, that's the one that Steve Detells is the principal, but I think it ultimately got bought by Areva for, was it 2.5 or 4 billion? I can't remember.
Yeah, you're absolutely correct. That was the uranium project that was sold to Areva in 2007. I remember. Operating officer and then latterly the CEO.
Thank you. Just going back to the near-term production, how hard is it to mine cobalt? If you were to look at that dual strategy, because obviously, I think building up a big resource with commodity being in so much demand and nearby mines potentially looking to add to their resource base, but the market here certainly does like some sort of indication that there might be some nearer-term production even on a small scale, so at least the PLC can wash its face. You know what I mean?
Yeah,
just how hard it is, really.
No, it's not difficult. These resources are near surface, so it's relatively straightforward to start with a plan and execute a starter pit. It's an earth-moving exercise. Obviously, there's a bit more science to it than that. You've got to understand exactly where the ore body is, look at the economic, do the economic analysis of the resource, and make sure that your mine plan is optimizing that for whatever scale you decide to proceed with. But it's certainly very much one of the tools that we have at our disposal, and something that we continue to review and look at. The trick, as I mentioned earlier, is not to sterilize the bigger picture by being a little bit careless up front. So there is a little bit of science to it, but it's not at all difficult.
Thank you.
I'll fill in with another question. Anyone who wants to ask a question, just unmute yourself with #1. I've got a question. Basically, what's your thoughts on the noise around the royalty changes in the DRC? How do you think this could affect the company, or do you have any views on it?
Of course. Look, 10% royalty would be, is a large number, but don't forget that most cobalt mining mines copper and cobalt as co-products, and the copper grades are typically paying for a lot, if not all, of the cost of operation. So the cobalt, at the moment, $80,000 a ton, that's almost all covered. The costs of that are almost all covered by the copper that's sold as a co-product. So 10% that would take, if you're on a ton, down from 80,000 to sort of just over 70,000, 72. So it's still a very high margin. I think the other things to say, and I'll hand over to Iain because he's done more in Congo than me, but I think the other things to say is that Congo is 2/3 of the world's cobalt, and it's more than half the world's resource. And so there's a degree to which price is being set by Congolese production. And I think in that regard, the fact that Glencore has announced a significant increase in production is a welcome development, because I think that the market needs to see that supply is reliable and continuous. And having a major player like Glencore, who's just had stellar results, expanding production to meet the very strong growth in demand from the world's dominant supplier is a good thing. But let me hand Iain just to talk a little bit about DRC politics, because he's resident in Africa, whereas I'm in Europe.
There's obviously a lot of noise and concern about what's happening in the Congo at the moment, particularly in light of what happened in Tanzania last year, where royalties were pushed up and it resulted in all sorts of strife. The reality is, though, that the Congo has gone through this process at least 3 times in the last 6 or 7 years, and each time it's been knocked back by the Congolese government themselves, recognizing that stability and transparency is probably better than a short-term gain. That's not to say it won't happen. It's part of the process of operating in Africa is understanding the dynamic on the ground and understanding how to manage a situation. There's quite a concerted drive by some of the major mining companies to have a debate around this particular process. So it's by no means done, and it's certainly not promulgated yet. So we'll wait and see. I think what's important is that as long as the region is stable and is perceived to be stable, and there's transparency in the fiscal regime, companies can plan and can operate. What companies dislike the most is instability and not being sure of where things are going. So the mere fact that there's a rigorous debate at the moment is a good sign. Whether it ever happens, I'm personally not so sure, but time will tell. Either way, we'll manage it. And as Roger said, what's particularly pleasing about copper cobalt is that cobalt is essentially a second product which is paid for by the copper in pretty much all circumstances. I'm sure that answers the question adequately.
Yep.
The other thing I should just mention is that there's obviously quite a bit of concern at the moment about the general political situation in the DRC. Congo is a massive country. Katanga is almost a remote satellite region of the Congo. It's very far from Kinshasa. It's obviously the mining hub and has been for 120 odd years. It's a much more I was going to say stable region of the Congo. It's much more institutionalized. Mining companies have been operating there successfully for many, many years. It's almost a satellite of the country. And of course, the Congo has gone through many political changes over the last few decades, and it just carries on operating, and people carry on operating. The trick is to understand the framework, is to make sure that you set up, structure your businesses properly, and of course that's what Medini in part brings to the party. We've operated in much worse jurisdictions in the DRC over the years. The trick is to operate, set up the structures properly, to understand the framework, to make sure that the I's are dotted and the T's are crossed properly, and that you're essentially above board, and everything is structured adequately, and that's part of what we bring to the table. And Sergeant Gando is, of course, very important in that respect. He's got a tremendous network in the region, and has operated in the Congo, both as a young engineer and more recently at the corporate level.
Any other questions?
Hello, it's David Marshall here. Just a question about how these copper cobalt deposits are typically laid down in the ground. It's my understanding that they're broadly flat and continuous. Is that some? Could you confirm that?
Yeah. Well, look, I'm a geologist originally, David. I mean, that's how they started. But what's happened since? I mean, they were laid. You can almost think about them in their origin as like coal seams. They were laid down sort of in oceans, by what's these days would be known as black smokers. These things that you get in the middle of ocean bottoms, which spew out, very metal-rich fluids which settle down. But then, over the millennia, in fact, over the billions of years, these things have been folded and distorted. So whilst they are what you'd call sedimentary in origin, they have been distorted and bent by folding and faulted, and it also by kind of subsequent volcanic activity remobilized. So whilst, and enriched as well. So, that's a good way to start thinking about it, but it is more complicated than that. I should say that one of the targets we're focusing on, which is called the Grand Conglomerate, Kamoa, which was discovered by Ivanhoe, or Ivan Platts, was a major insight that realized the mineralization crossed out of the traditional rocks and into another series called the Grand Conglomerate. And that Kamoa discovery is now on record as the 5th or 6th biggest discovery of copper globally ever. So that shows that the mineralization is more complicated than just thinking. But it's a good basis to think about it. And we are going to be looking at the Grand Conglomerate, which outcrops on Kasinka.
I think it's fair to say that, as Roger says, it is essentially a sedimentary deposit. It's tabular. It was formerly very regular, but it's obviously been distorted by folding and various activities since then, and then remobilization and re-enrichment. But I think what's important is that once you're on the right geological horizon, it's very continuous, and it's very easy to plan your exploration work first of all, and then obviously to plan the mine subsequently to that. The trick is to find the high pockets of grade within a large continuous sedimentary sequence. The beauty of operating in the copper belt, and I stress this every time I speak to people, is that because the region has been worked very, very systematically and quite intensively for 120 odd years, the geology is actually quite well understood, and it's quite clear where the better target areas are, and that's of course the first thing that we focused on when we looked at copper cobalt opportunities in the copper belt is at that starting point. So yes, it is relatively simple, but it's not as simple perhaps as might at first sight appear because of the subsequent deformation and enrichment.
Okay, thank you. That sounds great. So in terms of if we have a success with the auger drilling, it's very likely that doing some step-out programs around that initial success would yield further mineralization.
Certainly.
Yes. Yeah, I mean, the auger program starts, as I've said, imminently, and then, we'll, based on results, I'm hoping to be in Congo within the next 2 weeks. I'm waiting for a visa, and then I'll go there fairly straight after the visa's awarded. So, I should be, in terms of news flow, I hope to be back in the UK by mid-March, with certainly some kind of video of the augers working, and, we'll be posting photos to our website. But, we will be looking to kind of publish results as we go forward as well, based on the augering and other exploration activities that we'll be engaged in.
Okay, great. Thank you. Just one more from me then. Would it be possible to talk a little bit about the Chinese activity in the Congo, in particular in relation to copper cobalt? I know recently that there's quite a lot of media speculation about China creating the new Silicon Valley for EV going forwards. What's the appetite for discoveries of hopefully a decent size
They're there at every level. You know, one of the biggest copper mines, copper cobalt, because remember they are mined together, in Congo, Tenke Fungurume, and that used to be owned by the large U.S. company Freeport, and that was bought by China. I think it was China Molybdenum, but a big Chinese kind of industrial scale company. And so they're there at that level. They own a number of the major mines, but they're also, you know, they're at a small scale as well. They're, you know, they're a little kind of mom and pop corner shops run by Chinese, more buying material from the artisanal miners as well. So, I mean, the number I've seen is that up to 70 to 80% of all the cobalt mined in Congo goes to China. And, you know, you've seen the stats of how much cobalt in China is dominating the market. So, and the other thing I should say is that the Chinese are there looking for assets with cash as well. You know, one of the challenges that we as a sort of a listed London company with all the commitments towards ethical, you know, operations, which we, you know, wholeheartedly embrace, you know, but the Chinese are there with cash offering deals. And so, you know, negotiating that is part of the a part of what I think, you know, we will be continuing to do as we go forward. So yeah, the Chinese are huge.
Okay. Great, thank you, Ian. Thank you, Roger.
And the Chinese have a very strategic view to commodities that they identify as being strategically important for the development of their economy, of which cobalt is clearly one. So they have as Roger outlined, a multi-pronged approach, and really try to cover all the bases. And that's very evident in the DRC.
Yeah, China, as we all know, has got a massive pollution problem, and you know, one of the key benefits of electric vehicles is reduction of pollution from internal combustion engines. Any other questions?
Roger, can you explain the auger program, please, and how this will come out? Why you're using that as opposed to reverse circulation or diamond drilling into hard rock?
Augering is a very one of the first steps in exploring in this type of ore body is the geochemistry in the soils. And what you're looking for are enriched levels of various elements which indicate the underlying geology. And typically you can do it by grab sampling on surface trenching. Augering is a very effective, efficient way of getting to depth and getting just above whatever's underlying the soil profile. And essentially looking at those elevated levels of cobalt, copper, nickel, whatever it is you're looking for. So it's a very quick, highly efficient, simple way of getting a very good, decent sized sample. Typically you would follow it up with drilling, and certainly we will do that. But the augering is the sort of starter program, if you like.
Yeah, and one of the advantages of Congo is the weathering profile. So, you know, down to 40 or 50 meters, the ore is oxidized and therefore much cheaper to mine. But one of the other points about that depth of weathering is that there's quite a, you know, maybe up to 15, 20 meters of soil profile. So if you're relying on kind of geochem, which is a very effective means of identifying the copper cobalt mineralization, and you're sampling at surface, you're not going to get as strong a signature as if you're taking soil from sort of the base of the soil profile 15, 20 meters below surface. And that's why, you know, augering is a good means to collect that data.
Thank you, Shanklin. How quickly are the results turned around? Because everyone, I guess we've got to see what we've got here. I mean, how steady a stream of results will we be getting back from, I presume, the labs?
Exactly. You know, XRFs are a good tool once you understand what they're telling you. But I think before starting to say too much about XRFs, we would like to, you know, we will take what looks to us as very, you know, attractive material identified by geologists, and we will do some lab work to confirm that what we're saying is right. I think we want to be very clear and accurate about what we have, and so I think we will be a little more conservative to start with to make sure that that we have the information that we provide to the market is accurate.
So what's good grade for cobalt in the region? I don't really know. I'm not really too familiar with.
Point one is, just the way I think about this is, if it was a ton of 100% cobalt and you mined it, that would be $80,000 a ton, which is incredible. So, point one is $800 rock, which is still, a massive value. No, it's $80 rock, but that's still a very high margin. Your cost of mining maybe $5 or $10. So it's still very high margin. And don't forget, you're also getting, there's usually copper in there as well, which is a co-product, which is usually at a much higher grade than the cobalt. So the value of the rock would be at 0.1 cobalt. Is maybe they would commonly be 0.5% or 1% copper. So the value of the rock would be well over $100 a ton, and that's very economic. There's companies that mine other minerals, which have got a in situ value of $20 or $30 a ton.
So what grades did you previously get from? I think you did some XRF work beforehand, did you not?
Yeah, the XRF from the pit reported by the independent geologist was 2.5%, which is just off the chart. But that doesn't mean that the whole thing, it doesn't mean that the whole ore body would be at 2.5%. And as I've said, even if it was at 0.1, that would be, phenomenally economic.
Thank you. Interesting.
So if anyone else has got any questions, #1 to unmute. Let's see if anyone has.
The other thing I would propose, if anybody's got another question, the other thing I'd propose is that I hope to be in Congo in the next 2 weeks and back by mid-March, and I'd be very happy to kind of follow up with anybody who's just listening or anybody else who's on this call with feedback from then, and we should be putting news through out by then as well. Okay.
I don't think there is. I've got one more question, Roger, which is sort of two questions in one, really. But and it's come from a shareholder to me. In terms of, obviously, the company's strategic focus now is sort of on the DRC, African battery metals. Are you pretty much going to remain focused on the DRC? Are you going to look at any other countries, any projects out in other countries, or do you really want to sort of like home in on the DRC and perhaps look at other licensed opportunities there, or even perhaps a project that's slightly further down the line?
Hello?
Hello?
Yeah, sorry, it just went. Can you still hear me? It just went quiet for a second.
Yeah, I can hear you, yeah.
Cool.
Did you hear my question?
Yeah, I did. I'm ready to answer it. Look, this year 2018 is about one thing, and that's cobalt in DRC. But the name of the company is not, African Cobalt, it's African Battery Metals. And that, I think, we chose that deliberately because of the nature of our connections. We know a lot about several other countries in the region. There are some very attractive pegmatites, which is the host rock for lithium in Congo, but also in Zimbabwe, in Mozambique and elsewhere. These are all countries that we know well. And there are other battery metals that we're aware of. Of course, copper is itself a battery metal, and there's nothing else that carries electricity as well. But there's other metals like manganese, which are nickel, and we're aware of opportunities. Now, we're not going to do anything about those in the near term, by which I mean this year. But we are aware of opportunities, and if we're as successful as we really hope to be on cobalt in Congo, there will be a time when it may be worth adding other assets in battery metals to the portfolio through Medini. And Medini, I should say, has operating gold projects in Zimbabwe, but was an underbidder on the privatization of a lithium project as well. So there are opportunities elsewhere, but that's not for now.
Okay, that's great.
Okay.
Yeah, well, I don't think there's any more questions, and obviously, no, time's running forward now, and I know you've got a meeting, so we could probably close the call there, Roger. I don't know if there's anything else you want.
Darren, I've just got one. It's Hal from Optiva here. I was just wondering, on the last explanation, Roger just explained, obviously, there's a lot of projects available in Medini. I was just wondering what sort of benefit to Medini is there? I mean, are they going to get a large free carry on the what ABM raised on the back of it to finance the project, or?
I think that's a great question, and it's one that both Iain and I are directors and have been directors of other companies. We fully understand our corporate, and we are significant shareholders in ABM. So there is the last license that was bought, ABM paid Medini a fee for that, but there was no free carry. But it is true that we ABM rely upon what Medini brings significantly, and we are contracting them. We have a formal contracted relationship in terms of managing our exploration. So I think it is reasonable, beyond paying them a fee to manage our exploration, that if there are other quality assets brought which makes sense for ABM, then they would have to be a payment. But I think we would have to take counsel from our advisors, both our Nomad and our broker, of what's reasonable. But we will. I think it is right that there should be some payment. I don't know that a free carry is the right way to do it, but it may be, through some sort of equity participation. And it's worth saying that neither Iain nor I are very well paid by ABM, and we're happy with that. We want to leave the cash in the business, but one of the things that we will want to do at some point, and every share I have, I bought personally, ditto Iain. So, at some point I think we would like to put a sort of an LTIP, to give us more, incentive. But, we'll do that again with our advisors' blessing and, due diligence on whatever we propose.
Brilliant. Thanks.
Okay, if there's nothing else, I'm happy to take another question or two. If there's not, I'd be very keen to kind of do a follow-up call in about 3 weeks' time.
Okay, that was very useful, Roger, and thanks, Iain. Yeah, we'll look to put something in the diary going forward, and thanks for your time today.
Alan, thanks very much for organising.
No problem. Thank you.
Cheers, guys. Thank you.
Thank you. Thank you.
Bye.
The leader has left